Welcome to the deep dive.
Yeah.
Let me ask you something. Think about your bank right now. Your app, the website. Is it all, seamless, intuitive, maybe even a little bit magical?
Or maybe still a bit clunky. Too many clicks, perhaps. Different apps for everything.
Exactly. Today, we're doing a deep dive into this massive digital transformation happening in banking. We're really focusing on two huge forces reshaping it all: artificial intelligence, AI, and this emerging idea of super apps.
Right.
Our mission here is to unpack the main concepts, point out some pretty surprising developments, and most importantly, figure out what it all means for you, the customer.
And what's really interesting, I think, is that this isn't just about small tweaks in finance. It feels like a complete rethink.
Yeah.
Our insights today are largely drawn from a white paper. It's called Next Gen Banking, powered by AI, super apps, and digital innovation, written by Satya Swarup-Das. It gives a great forward-looking view.
Okay.
It helps us get our heads around not just what's happening, but why it's such a big deal and what it means for everyone.
The speed of change here is just, it's incredible. Feels like yesterday's cutting edge is already standard today. Let's maybe start by tracing how digital banking even got here. It wasn't always this common, was it?
Oh, no, not at all. It started quite small, really, way before smartphones were everywhere. Think back to maybe 2005. First Direct in the UK, they were one of the very first online-only banks, real pioneers.
Okay, 2005.
Then, jump forward to around 2010, you see Metro Bank launching, often called one of the first true challenger banks. Their big thing was this radical focus on customer experience, not just branches.
Okay. So that was the shift, the experience, not just being online. And then pretty soon, we saw banks that didn't even have branches pop up, right? The digital-only players.
Exactly. Move-In came along in 2013, really mobile first. Then Atom Bank in the UK in 2014, the UK's first proper digital-only bank.
Right.
And by 2015, you had Monzo in the UK, N26 in Germany really taking off. Revolut hit the scene big time in 2017, initially with multi-currency stuff, but then got banking licenses. And fast forward to just last year, 2023, and AI is, it's everywhere in banking, enhancing pretty much the whole value chain.
That timeline, just hearing the dates, you can feel how fast things sped up. But beyond these new banks appearing, what do the numbers say? How quickly did people actually switch to digital? Because the growth sounds explosive.
Yeah, the stats are pretty compelling. Let's look at the global transaction value for digital banks. Back in 2017, it was around, USD 230 billion.
Okay.
By the end of 2023, USD 4,960 billion.
Whoa, that's huge.
Yeah, it's a compound annual growth rate of nearly 67% in just 7 years. And the projection, it's expected to more than double again, hitting USD 10,440 billion by 2028.
That growth is just staggering and really shows how quickly people's trust and habits can change in finance.
What about the number of people using these services?
Similar story, really explosive growth. Globally, it went from about 33 million users in 2018 to 251 million by 2023. That's like a seven-fold jump.
And they project it'll hit 386 million by 2028. It's not just about convenience, it tells us something fundamental about trust. People are clearly getting more comfortable managing their entire financial life digitally without needing that physical branch. They want a different kind of relationship with their money.
So if you compare digital banks to traditional ones, it really boils down to a customer experience battle, doesn't it?
Yeah.
For you, the listener, what are the main differences you'd actually feel?
Well, fundamentally, digital banks are built from the ground up for mobile and online. It's usually seamless, often with 2047 support, maybe through AI chatbots.
Right.
They're super agile. They can roll out new features quickly, react to feedback. This allows for hyper-personalization using data to give you tailored insights, maybe proactive advice.
Okay.
And because they don't have all those physical branches, their costs are lower. So you often see reduced fees or no fees and clearer pricing. They focus on smart stuff like easy budgeting tools, smooth payments, all wrapped in a customer-first package.
And the traditional banks, where do they stand in this comparison?
Traditional banks, well, they still lean heavily on their branches, which means their digital side can sometimes be slower to update because of, older systems, bigger structures, less agile.
Makes sense.
They are investing a ton in digital now, obviously, but the personalization might lag a bit. Their fee structures can sometimes feel more complex too. But their big advantage, that established trust, decades of presence, solid regulation, that still counts for a lot.
Okay, so banking went digital. But what's really putting the booster rockets on this, pushing things further in terms of convenience, security, it's AI, right? Artificial intelligence is changing everything. And specifically, generative AI feels like the real game changer now.
Oh, absolutely. Gen AI. It
Mm.
uses things like large language models, these incredibly smart algorithms trained on tons of text and natural language processing, which lets computers sort of understand how we talk and write.
Yeah.
And that combination, it's hitting banking in so many ways, automating complex stuff, making customer service way better, and seriously beefing up fraud and risk management.
How so? Like specific examples.
Sure, it can streamline things like regulatory reporting, handling documents, processing loans. It can help draft reports, create pitch materials for investment banks, even speed up writing code for new apps. And crucially, it can analyze transaction patterns instantly, spotting fraud and risks much faster.
And the banks are betting big on this, investing heavily.
They really are. The projection is that banking investment in Gen AI will hit something like $85 billion by 2030, growing at over 55% a year. That tells you how core this is to their future plans.
So beyond Gen AI, where else is AI making the biggest splash in core banking stuff?
There are probably 5 key areas. First, enhancing customer service AI chatbots, virtual assistants giving 24/7 help, personalized advice, maybe even product suggestions just for you.
Okay.
Second, fraud detection and prevention. AI chews through massive data sets in real time, spotting weird behavior, complex fraud patterns that humans just couldn't catch as fast.
Right.
Third, risk management and credit scoring. AI looks beyond just the usual numbers, analyzing behavior, alternative data, giving a more accurate, nuanced view of risk.
That sounds like it could really open up credit for some people while being more precise overall.
Oh, well.
What about inside the bank itself? Operations.
That's number 4. Operational efficiency and automation. AI takes over routine tasks, data entry, processing transactions, checking documents, even compliance stuff, boosts productivity, cuts errors,
Makes sense?
and finally, cybersecurity. AI monitors network traffic constantly, spots threats proactively, allows for super fast responses, protects the bank, protects you.
Okay, now let's shift gears slightly to something even more advanced. Agentic AI. That sounds almost like autonomous intelligence. What's that about in banking? How's it different from the AI we just talked about?
Yeah, agentic AI. Think of it less like a chatbot answering questions and more like an advanced digital assistant that can actually do things autonomously.
Okay.
The key word is agentic. These AIs don't just follow preset rules. They have goals, they can plan, they can even learn and adapt their own strategies on the fly, kind of like a human agent would, but, at machine speed. They understand context, they can work across different systems, and they're constantly learning to get better.
So not just following instructions, but learning, adapting, taking initiative. Can you give us some concrete examples of where agentic AI might be used?
Absolutely. Think about automated KYC, know your customer and onboarding new clients. Agentic AI could handle identity verification adaptively, check against money laundering lists in real time, dynamically assess risk, all super fast, minimal human input.
Okay, that speeds things up.
For fraud, it goes beyond just flagging. It can actively detect unauthorized stuff using context, and it learns constantly to stay ahead of the fraudsters. In customer service, it's way beyond basic chatbots. Imagine getting tailored financial or retirement planning advice from a virtual assistant that truly understands your situation.
Interesting.
And for the bank's own operations, automating routine workflows but with context awareness, generating really accurate financial forecasts like predicting cash flow, much more precise planning.
This sounds quite futuristic, but you're saying it's actually happening now. Are there real-world examples we can point to, things listeners might actually see?
Yeah, definitely. Revolut, for example, they just rolled out a new AI feature specifically for scam detection.
Oh, yeah.
Their head of fraud talked about how it intelligently steps in to interrupt a scammer, but without blocking legitimate payments. So you get freedom and security. And apparently it cut their fraud losses by like 30% just in testing.
30%.
Yeah.
That's significant. What else?
Well, Bunk, another digital bank, they made news as the first bank anywhere to offer real-time speech-to-speech translation right inside their app.
Translation. Wow.
Yeah, using their AI assistant, Finn. Their CEO said it's about breaking down language barriers, making things simpler for people globally. And Revolut, again, they've expanded their robo-advisor service across the US, Europe, Singapore. It automates investing based on your risk level, your goals, making investing more accessible.
Okay, this all leads us really nicely into the other huge force we mentioned, banking super apps. How are these different from just the normal banking app most of us have?
Right. A super app is a pretty big step beyond a standard mobile banking app.
Yeah.
Your regular app does the basics, right? Check balance, transfer money.
Yeah.
A super app is more like a whole integrated digital ecosystem. It's built for mobile, obviously, but it brings together both your financial and your non-financial needs, all in one place, one interface.
Non-financial needs. Like what?
Think multi-service integration, an ecosystem approach, seamless user experience, really personalized using data, and designed to keep you engaged frequently. It aims to be your kind of digital command center.
So not just banking, but maybe shopping, travel, all in the same app, like running your life through one app.
Exactly that. Beyond the banking basics, investments, insurance, loans, they layer in things like e-commerce, maybe food delivery, booking travel, event tickets, you name it, all through that same app you use for banking. It's not just convenience, though. It creates this really sticky environment. The more stuff you do in the app, the harder it is to leave. That creates powerful network effects and gives them a ton of data traditional banks just can't easily match.
Where did this whole super app idea even come from? What's the history there?
Well, the sort of core concept, deeply integrated apps, was actually floated way back in 2010 by Mike Lazaridis, the BlackBerry founder.
Oh, interesting.
But the real pioneers, the ones who set the standard, emerged in Asia between roughly 2011 and 2020. Think WeChat Pay, Alipay in China, GoPay, Paytm, GrabPay in Southeast Asia and India. They led the way.
Right, those are huge names.
Then more recently, say 2021 to 2023, Western players like PayPal and Revolut started adopting and adapting the model for their markets. And looking ahead, 2024, 2025, we're seeing even smarter AI-powered super apps, hyper-personalized, maybe using blockchain, advanced analytics too.
Okay, so to be this one-stop financial command center, like you said, the super app needs a really solid payment system built in, right? What does that look like?
Absolutely, that's the backbone. They integrate tons of payment methods, digital wallets, obviously, peer-to-peer payments, smooth credit and debit card links, direct bank account connections, real-time payments for instant transfers, plus integrated bill payments, virtual cards for security, managing subscriptions, and often those buy now, pay later options too.
Got it.
All these tools together make it truly that central hub for pretty much any daily financial task.
The market for this must be enormous then. What kind of growth are we talking about?
Oh, it's huge. Gartner estimated the global super app market was around $61 billion back in 2022.
Okay.
The projection for 2030, a staggering $436 billion.
Wow.
That's a compound annual growth rate of nearly 28%. It just shows how this model, starting in Asia, is really shaking up the digital world, especially finance, and putting pressure on traditional banks.
That is massive growth. What are the key technologies really driving that, shaping how these super apps develop?
Well, several things are coming together. AI, like we've discussed, is massive for that hyper-personalization, predicting what you need, making the app feel smart.
Right.
Open APIs are crucial too. They let these apps easily plug in services from other companies so they don't have to build everything themselves.
Okay, like connecting to other services.
Exactly. Blockchain is playing a role too, enhancing transparency, security, maybe enabling decentralized ID or smart contracts for automated agreements.
Interesting.
Then you see other things like gamification, making it more engaging, building loyalty, nudge theory giving you timely, helpful suggestions, robo-advising for automated financial guidance. They're pulling in lots of tech.
Let's make this concrete again. What are some real-world super apps people might know or use?
Well, Revolut, as we mentioned, is a great example of a financial super app, banking, investing, travel, all trying to simplify your money management.
Okay.
Alipay in China is a giant. E-wallet, payments, investments, sure, but also tons of lifestyle stuff, food delivery, ride-hailing. It's woven into daily life there. And T-Bank, which used to be Tinkoff Bank in Russia, is another interesting one. Financial products, yes, but also a marketplace for goods, health services, lifestyle stuff, all with AI recommending things based on you.
It's clear these super apps are incredibly powerful. But it's not just disruption, is it? You also see collaboration. Why are traditional banks starting to team up with fintechs and super apps? Seems like they almost have to.
It really does seem necessary for many of them. There are some very good strategic reasons. First, it lets traditional banks reach huge numbers of mobile-first customers, especially younger ones, without building all that tech themselves, which takes massive time and money.
Right. Tapping into an existing user base.
Second, it fuels rapid innovation. Fintechs are generally faster, more agile. Banks can leverage that to get new services out quicker, personalize things better than they could alone.
Okay.
Third, cost efficiency. It's cheaper to partner than to build an entire digital ecosystem from scratch. Fourth, you get this regulatory synergy combining fintech's innovation with the bank's experience in navigating complex rules.
Makes sense.
And maybe the biggest one, it unlocks embedded finance, putting lending, insurance, investment tools right into the apps people use every day, making finance part of the flow of life.
So this isn't just theoretical, it's happening globally. Can you give some examples of these partnerships?
Oh yeah, lots of them. Citi partnered with Grab in Southeast Asia, co-branded credit cards, lending inside the Grab app.
Okay.
BBVA worked with Uber in Mexico to offer digital bank accounts just for Uber drivers. Tinkoff in Russia embedded financial services within Yandex's big ecosystem.
Mm-hmm.
Standard Chartered teamed up with Atome in Asia for buy now, pay later, targeting younger consumers. Goldman Sachs famously partnered with Apple for the Apple Card and Apple Pay integration.
Right, that was a big one.
DBS Bank linked up with Gojek in Indonesia, digital banking within the ride-hailing app. HDFC Bank and Paytm in India did co-branded cards and merchant loans. And Nubank in Brazil even uses WhatsApp for customer service and P2P payments, leveraging that huge user base.
Those are some really smart strategic moves. Changes how banking gets delivered. But partnerships this big, especially between traditional banks and fast-moving fintechs, can't be easy. What are the main challenges they run into?
You're absolutely right. There are definitely significant hurdles. Regulation and compliance is a big one. The rules are different everywhere, and super apps often cross borders.
Tricky.
Then there's managing the brand and trust. If the fintech partner messes up, it can really hurt the bank's reputation, which they've built over decades.
Good point.
Data privacy and security are huge concerns too. Who owns the data? Is consent clear? Are the integrated systems secure enough against cyber threats? Lots of questions there.
And I bet mixing different business models causes friction sometimes.
For sure, conflicts over revenue sharing, who owns the customer, who gets to cross-sell what.
Yeah.
That can definitely happen. You also have cultural clashes, the bank's often careful, risk-averse culture versus the fintech's move fast and break things style.
Yeah, I can see that.
Keeping the customer experience smooth and consistent across everything can be tough too. You don't want jarring differences between the bank's part and the partner's part. Integrating old legacy bank systems with modern APIs is still a technical challenge. And finally, there's a risk for banks of becoming too dependent on the super app for their customers, losing that direct connection.
Wow, okay. What a journey through the future of banking. So, just to quickly recap, we talked about how digital banking evolved from those early pioneers to the explosive growth we see now.
Right. Then we really dove into AI's impact, Gen AI automating things and boosting fraud detection, and even agentic AI creating these autonomous intelligent systems.
Yeah. And then the rise of those multitasking banking super apps, mixing finance with everything else in one place, really changing how you handle your money.
And finally, looking at how traditional banks and these fintech super apps are partnering up the strategic reasons, but also the real challenges involved.
And these changes, they're not just abstract trends out there. They're actively changing how you interact with your money day to day, offering new levels of convenience, personalization, and security too.
It fundamentally reshapes that relationship you have with financial services.
So thinking about all this, with finance and daily life blurring together inside these super apps, what new questions pop up? Maybe ethical ones. Or new ways to bring more people into the financial system, things we haven't even fully grasped yet. How might this shape not just how we bank, but maybe even our bigger lifestyle choices down the road? Definitely gives you something to think about.